Okay, hello everyone and welcome back. My name is Greg Furman and this is the Vantage Point AI Market Outlook for the week of April the 28th, 2025. Now, to get started this week, we'll begin with the US dollar index. Now, a choppy week for sure, but the dollar is holding some gains here. Our MA diff cross continues to point higher. We've got a rising predicted RSI and we're coming into a period of known US dollar strength. Now, Trump is always going to be the wild card here with the tariffs and everything else, but we've got a new verified support low. That area coming in at 97.68, and we'll use that for our baseline for next week's trading. Because again, this is an outlook, not a recap of something that's already happened, guys. We're pointing to next week's trading in this throughout this entire outlook. So the indicators are somewhat neutral on a Friday, but you'll see that the medium term strength is rising, and that's what we're looking for, is that strength to build into that first week of the new month. Now, when we do a comparative analysis to that with the S&P 500, now the stock market's again a tough week, but they are recovering. You can see that we've got a new verified support low that's coming in around 5101. The main indicators here are pointing higher. We've got momentum building with that predicted RSI breaking the 60 level, but we're still below the monthly opening price and the yearly opening price. We're still negative on the year. However, things are looking pretty good, and with the S&P 500 positively correlating to the US dollar index, that means they can both go up together potentially next week, and that's what we would look for. Now, Wednesday, I believe Wednesday of next week, which is the May 1st, we'll get a new monthly opening price, and that will shift. So be mindful of that, that when the new month starts, that we're going to move that monthly opening price to that new level. Now, with Bitcoin on a real tear here, the last couple of weeks as gold fails again. Now, Bitcoin really is at a crossroads right now. We're at the yearly opening price, 91,592. We've had a very, very good close here, but we've got to hold above this level, guys. My only bit of a concern is that we're going to get a significant pullback before we go higher again based around that period of dollar strength, but not necessarily. But if we do, our downside support levels for next week, 95,592 and 87,545. And excuse me, that calendar yearly opening price is 93,804. That is the level. Sorry, we want to make sure we're keeping a very close eye on that. If we can hold above that, then Bitcoin has plenty of room to extend. Now, when we look at some of the additional markets, the European market, the DAX, once again, I've been a strong advocate on the buy side of this. We've had our corrective move lower, but the DAX has held up far better than any of the US indices or some of the global indices for that matter. So again, we've had our significant sell-off here from the current monthly opening, but we've recovered from that, unable to hold below the calendar yearly opening price. Now a firm buy signal is forming. Now, the only thing I would advise my friends in Germany, and you know who you are, be careful of that death cross right there. That is a potential warning sign that the upside, at least for next week, could be limited. That's the pink line over the blue line. So be very, very cautious with this. And you can see that the DAX has parked itself right under that current monthly opening price. But our T-cross long now, that's coming in at 21,562. I believe that level will hold, and we should see further upside. But again, let's let it correct a little bit lower first before we jump into this any further. Now, when we look at gold contracts this month, again, gold was doing very well, but this is a very clear pattern that's forming with gold at the end of the month. And in my respectful opinion only, it's tied to that period of known US dollar buying at the end of the week or the end of the month into the first week of the new month. So we've had a retracement here, but I think we have further downside, at least for the week. That death cross, as some of you guys love to call it, I love that name, the pink line over the blue line, and you can see that that happened actually before gold made that all-time new high. And we were actually doing this one in the Vantage Point live training room, and I warned everybody in that room, be very, very careful here because I don't think we're going higher. So this will be corrective in nature. Our T-cross long, that's going to come in at 30, about 32, 32.91. And if that can hold, we can go higher. But I do think that gold can still go higher. But we've got to see what the Fed is going to do this month. What is his game plan here? Is he going to hold? Is he going to talk about potential cuts? Inflation with the Trump tariffs? We don't know. So either way, I think gold is going to benefit from that, but we need a significant retracement first and get past that period of known US dollar strength. Now, we also want to make sure we're monitoring light sweet crude oil in the coming weeks, because in most cases that seasonal pattern kicks in when oil is strong mid-May through mid to late July, even into August. So we're pressuring that Vantage Point T-cross long every single day last week, guys. Banging into that T-cross long, and usually when I see this, a bigger move is forming, meaning that we're getting ready for a bigger move to the upside, or it's going to collapse and fall lower. Now we do have an MA diff cross here that's pointing lower, but we've got strong verified support down to 59.87, where I will definitely be a buyer into that area with that known seasonality getting ready to kick in here soon, probably within the next 2 to 4 weeks. So I think that it would be very difficult for oil to get below 54.64. So if you are a buyer in this area, just make sure your stops are below that verified zone. Now, we should also monitor the VIX. If we're thinking about buying equities, then we want to have a very close look at the VIX. And as you can see, once again, a little bit of a concern with that MA diff cross pointing back to the upside. Now, the VIX is still very much positive on the year, above the monthly and the yearly opening price, but the question is, can it hold above that? So this is going to be up to what we get out of the tariff war, whether he's going to back off on this a little bit, which I think he might. That should push the VIX lower, and then we'll reassess this down around this 1864, or more specifically, the current calendar yearly opening price at 1771. But the indicators are, again, very mixed here. But our resistance for the week, next week, the T-cross long, that will come in at approximately 25.23. Now, when we look at some of our main Forex pairs, once again, warning everybody last week that in most cases, the euro, like gold contracts, there's about a 90% positive correlation between the euro and gold. So if gold tanks, it's likely going to drag the euro down with it, and that is exactly what happened. But structurally speaking, the euro still looks pretty good here. The monthly opening price 108.15, the yearly opening price 103.57. But for next week, our T-cross long, I can all but guarantee we are likely to test 112.42. But be careful next week around that particular area, because it could be just corrective in nature with that period of known dollar buying. So if we hold 112.42, the primary trend in the euro will continue to the upside. But my optimism again on that remains heavily guarded. Despite what's happening in the US, in my opinion, the euro is in worse shape than what the US is. So it could be somewhat a theory of prettiest horse in the glue factory, so to speak. But again, watch that key level. Now, the US Swiss franc, once again, if the dollar index can pull higher, then US Swiss franc will break through the T-cross long at 83.40. But that is our main area that we have to watch more specifically for next week. If we can't break through it, then the primary trend will remain to the downside. But with the pink line crossing the zero line, the MA diff cross warned us not to buy down here. And you can see I've even drawn a line right across here. And last week I'm buying this every single day based on that pink line crossing the blue line. And what that's doing for new viewers is it's showing the medium-term trend against the longer-term trend. So the trend has clearly been down, but that medium-term trend is weakening and it's showing that there's a move back to the upside. That is what occurred. So again, the only way we can continue buying this is next week is if we can break through 83.40. Now, the UK, again, not in much better shape than everybody else here, and I think they will start to cut here soon. So very few buyers up here. We have a verified resistance high that's coming in at 134.23. I do think that next week we will move towards a corrective move towards 131.64, and then we can reassess. But if we can break through that T-cross long, we will very quickly run down to the 129 level. And again, just to be clear, the primary trend on this is still up. We're positive on the year at 125.13. So we're looking for that corrective move so we can pick up longs again. But let's assess what we get from the Fed here. There's going to be a lot of Fed chatter next week. We'll see what transpires, but for now, a retracement is very likely based around the core VP indicators. Now, the dollar yen, I've been a relatively strong indicator of shorts on this particular pair. You can see that structurally, we're below the yearly opening price, the monthly opening price, but that's April. We're going to get a new monthly opening price, I believe, on correct me if I'm wrong here, Thursday, excuse me. So on Thursday, we're going to get a brand new monthly opening price, but the bias is still lower after a corrective move higher. But if equities continue to advance, the S&P 500, the Nikkei, the DAX, if the global indices can move higher, then that could pull this pair back up. But again, it would absolutely be corrective in nature. The only thing that could offset this is the market is susceptible to the carry trade, meaning buying dollars, selling yen on the borrowed money. But again, that's a very volatile trade these days. And there's a lot of people that are nervous about this particular trade, much like the basis trade. They're very nervous of that too. So we'll continue to monitor this, but the T-cross long is our line in the sand for next week, 144.26. Now, it is likely that we would move higher, but we would be looking for a selling opportunity as the carry trade comes apart. So again, if we can hold above 144.26, we may be able to start to slowly grind towards 149 by Thursday. It's possible, but I think very, very unlikely. I think more than likely after we've had a corrective move higher, the primary trend this year will continue as bigger traders start to exit the carry trade, forcing most of your Japan pairs, Euro Japan, Great Britain Japan, Canada Japan, and of course they all stem from US Japan, pushing all of these pairs lower. So we'll monitor that for now, but we are likely to see some potential upside, at least for the next week. Now, the Canadian dollar likely to see some volatility next week. The Canadian election is on Monday. We'll know who the next prime minister is. Economically speaking, that will set the tone likely for the Canadian dollar. If it's either going to rebound or it's really going to come under selling pressure. So for now, the Canadian dollar is relatively strong against the U.S. dollar for now. But I would look for a retracement to the T-cross long next week at up to 139.70. Then we can reassess if we wanted to continue to buy this pair. But I think it's unlikely that there'll be a big move to the downside regardless which party gets in Canada. There's going to be a cooling off period there. We've got to see if it's a minority government or a majority government. But that will set the tone for the Canadian dollar, in my respectful opinion, for at least the next 6 months. So again, expect volatility in the Canadian dollar across the Forex market, the cross pairs, but I believe selling the Canadian dollar is still the better play, or buying US Canada, buying Euro Canada, Great Britain Canada, Aussie Canada, New Zealand Canada. All these pairs group in or basically run off of the US Canadian pair. Now, when we look at the Aussie and the Kiwi, once again, if stocks continue to go higher, then the Aussie and the Kiwi will follow. So a little bit of concern here. We've got a new verified resistance high, 64.39. I'd like to see us get above this quickly and get out of this area here, but we are positive again on the year, 61.89. But you can see how quickly that can change if there's more tariff talk between China and the US, and if they don't put this thing to bed soon, that actually could really hurt the Aussie and the Kiwi and the Canadian, a number of different currencies. So we'll see what we get next week. Things have cooled off a little bit, I would say, between China and the US. And if it continues to point towards a resolution, on these tariffs and the trade war, then Aussie could easily extend higher. But just know what is the driver here. Between the Aussie and the Kiwi, the driver on both of them is going to be the tariff war, the trade war, so between the US and China. So if it settles, then the Aussie and the Kiwi will go higher. But for now, they both look a tad overextended here. I've got an MA diff cross on both, so I would look for a retracement back to the T cross long, potentially on the Aussie and the Kiwi. But then we would also be looking for a potential buying opportunity here, because either way, the Aussie and the Kiwi their trading partner is still China, and China is still doing very well. So I believe that these currencies have room to extend. They just need to correct a little bit lower. So expect another choppy, volatile week next week. But with that, there will always be opportunity based around the intermarket correlations. So with that said, this is the VantagePoint AI Market Outlook for the week of April the 28th, 2020.